In this video, we'll share the reasons why we think the US dollar and the pound can offer some great trading opportunities this week. Hi guys, it's Arnie here from Forex Source and welcome to another week ahead video. Now, this video will cover the trading week from the 10th to the 14th of June 2019. And our main focus points for this week will be a possible trading opportunity on the United States dollar and also a possible trading opportunity on the pound with some very important political and economic data due this week. Let's jump to the video to see why these events will be important.
Okay guys, so our first focus point for this week is a possible selling opportunity on the United States dollar. Now, things made a turn to the bearish side last week for the US dollar, and according to CME Group, the expectations of a July rate cut by the Federal Reserve has climbed to just above 85%. Now, the reason for this change has been various Fed members who's raised concerns about the outlook of the US economy. They basically mentioned that interest rates is currently a drag on US economic expansion and that they would consider rate cuts if the economic outlook does not improve. Now, on Friday, the US non-farm payrolls came out with a very big negative surprise, which basically caused markets to move up their rate cut expectations. And this NFP report was more important than usual, as some Fed members like Bernard mentioned that they will be paying very close attention to these numbers to see how healthy the labor market really is. Now, this week we have two important economic data points which could offer a selling opportunity on the US dollar if they are to also come out with big negative surprises. On Wednesday we have CPI and on Friday we have retail sales. Now, CPI on Wednesday will be important in terms of Fed rate cut pricing. You guys will remember that weaker than expected inflation has been one of the key catalysts for this increase in Fed members starting to talk about the possibility of potential precautionary rate cuts. So CPI will definitely be the more important of the two, but retail sales can also offer an opportunity if we have a very big a negative surprise. Now, a negative surprise on either one of these can or will probably increase the dovish pricing of the Fed. If we have a look at some of the market expectations, guys, we can see that CPI month over month is expected at 0.1%, and core CPI, the more important of the two, is expected at 0.2%. For retail sales, markets are expecting retail sales month over month to come in at 0.7%, and for core retail sales to come in at 0.5%. Now, possible ways for us to trade these events is to simply wait and see if we have negative surprises, and if we do see any big negative surprises, we can simply enter at market. Now, alternatively, if we see much better than expected numbers, that can provide a catalyst to move the US dollar higher in the short term, which can provide an opportunity for us to sell it later at a better price. Now, our second focus point for this week is a possible selling opportunity on the pound. Now, we know that the current driver for the pound remains Brexit and Brexit-related developments. Now, with recent political events, if we just quickly have a look at this next screen, guys, we can see that from our proprietary currency fundamental strength meter, that the bias for the pound has shifted and is now our most bearish fundamental major currency. Now, this week, the political events might give us some short-term opportunities to short the pound. We have the Conservative Party leadership contest beginning this week, and the first vote is scheduled to take place on Thursday, the 13th of June, with the final two candidates then being decided the following week. Now, at the moment, Boris Johnson is the favorite to become the next PM, but it seems as if this prospect of Boris in the driver's seat is really bad news for the pound, and we can see that in the charts, and that's part of the reason why we have shifted our bias on the pound to such a bearish view. Now, there's also two very important economic data points scheduled for this week to look out for. On Monday, we have monthly GDP estimates, which is expected to come in a tad softer. And then on Tuesday, we also have the latest UK jobs report, which is the more important data point for this week. Now, the best way to trade these two data points would be in line with any Brexit developments in terms of that leadership contest and the news that we receive from that. And with the current outlook of the pound being so very bearish, the best way to trade the pound this week with these two events would be to the downside if we see any big negative surprises in these two data points. Okay guys, so now that we understand the fundamental reasons for why we have chosen these two currencies to look at, we can move on to the charts and look at some of the technicals. Now, we'll follow the same technical process for every chart we look at in order to ensure that we stay consistent in our methodology. Now, In case we have a negative surprise on US CPI and retail sales, we can look to sell the US dollar against something like the yen, which has remained well supported as a safe haven currency in the midst of the US-China trade war escalations, as well as the negative global growth outlook. Now, in case we have any negative Brexit developments and we then have a negative surprise in the UK jobs report or GDP, we could look to sell the pound against the yen for the same reasons mentioned above. Okay guys, so moving on to the charts and looking at the USD yen, we can see that the pair has had quite a big move down after topping out at that 112 handle, and we are currently testing that 108 handle. Now we can also see from the chart, if we draw in our Fibonacci from the swing high to the swing low over here, that we have confluence with both the 38.2 and that 50% fib level, which also has confluence with the 109 psychological handle, and then we also have confluence with the 78.6 as well as the 110. Now both of these two areas that we've highlighted also has some support and resistance price action that we can see over here. So both of these two areas are potentially higher probability areas to look for a potential sell trade on the US dollar. Now, in case we have a negative surprise on US CPI and retail sales data, we could use these two areas as possible places to look for a shorting opportunity on the dollar. In terms of a stop loss, guys, whether we choose to enter at this area or this area, it seems like the highest probability or best place to place our stop would be just above this previous swing point, which is just below that 111 handle. Now, in terms of a price target, if we use our 100% Fibonacci extension, and the price moves into this zone and then turns back down, we can look to target something close to that 106. However, if the price decides to move a little bit higher and we only get our entry at this area and then starts to turn down, we can look to target something closer to that 107 handle. Okay, so moving on to the pound yen, we can see that the pair also has had a substantial move down with no real significant corrections or pullbacks. So even though we have that important news coming out on the pound, it would make sense for us to wait for some sort of a pullback or correction before taking a sell trade on this pair, as we don't really want to be getting in so close to the lows just to see the pair possibly move higher before it continues down lower. Now we can see, if we draw in our fib the same way like the USD yen from the previous swing high to the swing low, that we do have confluence with that 38.2 fib as well as that 140 and 141 handles. Now we also have some price action confluence with this support area as well as that support and these support areas. So this does look like a higher probability area to look for a possible short on the pair. So in case we have that negative surprises on the UK jobs numbers and we have that follow through with negative Brexit developments, we could use this area as a high probability area to look for a possible shorting opportunity on the pair. In terms of a stop loss, guys, it's a little bit tricky with this one, as the only real significant swing we can look at is the daily one, which is just below that 147 handle. And if we just quickly measure that out, even from entry, we just over 600 pips away. So it's a little bit far for us to look for a stop. So in this case, we either need to reduce our lot size to accommodate for that bigger stop, or what we can also do is drop down to a smaller time frame when the pair moves into that area and then look for a possible shorter term trade with smaller swing areas to look for that possible stop. So let's just quickly jump down to the H4. And we can see on the H4, guys, that this previous swing just below that 142 handle does look like a possible opportunity that we can use for a stop loss if we have an entry somewhere in this area. Now, in terms of a target, guys, if we just go back to the daily chart, if we use that 100% fib level again, and the pair does move into this zone and then turn lower, and we could look to target something close to that 113 hand of 131 handle, sorry. Something that is just important though is that 131 handle is very close to that flash crash low that we saw on the yen. So it might be worth to target something a little bit higher, maybe this previous support, which would make a target at the 134 handle look like a better option in this case.
Guys, thank you for taking the time to watch this week ahead video. We want to remind you guys that these videos are designed to help you to think and approach the markets like a professional trader. As such, it's important for us to realize that we never need to fear the red risk events like the CPI data for the US or the political data for the pound this week, as they can be some of the best opportunities to trade the forex markets. As always, guys, also remember that these trade ideas are based on the incoming data we receive that can change from session to session and from day to day. So make sure to stay tuned into that market moving news as it comes through on your news squawk on a daily basis. We wish every one of you a profitable trading week ahead, and we'll see you again soon. Cheers.